Very good morning to all those joining us on this broadcast. This is Krishnakumar, and joining us in the studio is Kartik, Malhotra and Suyash, Maheshwari as always, and you're watching Business Plus. Brand new morning for the markets. We also have a very special market guest joining us. We have Mr. Ambareesh Baliga now joining us on the broadcast as well. Mr. Baliga, thank you so much for taking time out to be with us here on Business Plus on News 9 Live this morning. Before we come to you, we have Suyash with us, who's going to quickly take us through the market action this morning for the first hour or so this morning. Suyash, if you can quickly run us through how markets have opened for trade this morning.
So, Krishna, Indian markets saw another positive start tracking a rebound in global equities. Now, if yesterday Nasdaq Composite ended with gains of over 1%, S&P also surged, and most Asian stocks were also trading in the green. So Nifty is taking cues from the global markets, and as you can see at 9:40 a.m. this morning, Nifty 50 was up 0.23%, sitting comfortably above 19,400 levels. Sensex was also up about 0.2%, above 65,300 levels. Mid cap and small cap indices were also trading in the green, and they have rather outperformed the market in opening trade. And Nifty mid cap 100 was up about 0.7%, and the small cap index added 0.68% in morning trade.
All right, so that's the opening trades. Before we get into sectors and stocks, Mr. Baliga, let me bring you into the show. Talk to us. Market snapped a bit of a two-day losing run yesterday, and then you have a full opening in the green across the board. Talk to us your thoughts on how markets are trading after the bull run we saw last month.
See, at these levels, markets are a bit iffy in the sense most of the triggers are done with. Earnings season is over. Now you have the inflation issue in front of you, and because of which it's possible that we could see one rate hike before we start seeing rate cuts. And also the rate cuts were expected sometime in January 2024. But now looking at the inflation, even that could get delayed. So that's a bit negative for the markets. And you have a China economic slowdown and a downgrade. I think that will have a fallout on the other countries, including India. And lately, we have seen in the last couple of weeks that FIs who had turned buyers have actually now turned sellers. So I think overall, the markets should correct from here because we have had an extremely good run in the last few months. Markets have become expensive at this point of time. You have had, a number of stocks, especially in the mid cap and the small caps, becoming multi-baggers in just about 4 or 5 months. So I think there is a bit of euphoria. There was a bit of euphoria, no doubt. And I believe that the markets should correct from here. But technically, I think 19,200, 19,300, this band, I think is a very good support. Once we break that, possibly we could see a decent decline. And I would say that the markets should see levels of about 18,500 levels in case we cut 19,200 levels.
All right. That's the broader markets, sir. Just stay with us. We'll quickly check of the sectors and stocks in action this morning as well. Then we can discuss the markets in detail for the day. Suyash, quickly talk to us the sectors in action in the morning and the stocks in action this morning.
So, Krishna, most sectors were trading in the green today, barring Nifty IT, which was down 0.24% in today's trade. Nifty Bank was up 0.24%, and it is trading currently above the crucial 44,000 levels. If it continues to stay above that, experts expect the rally to continue in the banking index to about 44,500 levels. Nifty Auto was another index which was in the news today, and the index is up about 0.5%. FMCG is up about 0.53%. Pharma was flat is opened on a flattish note, whereas Nifty Metal is up almost 1% in today's session.
So, okay, bank, auto, FMCG and metal stocks, in the news today. Talk to us about stocks per se. If you can give us an idea of what are the stocks in action this morning.
So the stocks that we were tracking this morning are Paytm. Paytm was up over 2% in today's trade. As you can see at 9:40 a.m. in the morning, it was up about 2.17 after Vijay Shekhar Sharma in a letter to the shareholders said that Paytm is investing in building artificial general intelligence software stack. Now he added that the AI system will help various financial institutions in capturing possible risks and frauds while also protecting them from new kind of risks related to AI. Another stock that was in the news today was Adani Enterprises. The stock was up about over 2% at 9:40 a.m. in the morning after promoter entities bought another 2%, 2.22% stake in the company, raising their holding to about 69.87% from 67.65%. Welspun Enterprises were another stock which was in the news today. The stock was up about 2.15%. Welspun Enterprises has acquired 50.1% stake from Michigan Engineering's at a price of 137.07 crore. Union Bank of India was also in the news today. The stock was trading opened about 1% higher, but by 9:40 a.m. it saw some profit taking over there after the company announced that the board has approved the QIP of 5,000 crore. SJS Enterprises was also in the news. It was down 1% after there were reports that the promoter entity may offload as much as 30% stake in the company in today's session via block deals.
All right, so Suyash there giving us a roundup of the stocks and sectors in action this morning. Let's take this back to Mr. Ambareesh Baliga. Mr. Baliga, you gave us a sense of the overall markets, but talk to us in terms of sectors. We have certain sectors in action this morning. Which sectors do you think are the ones worthy of investing, have value in them going forward, assuming that there is going to be more correction going forward, and of course, stocks that really catch your fancy?
See, I think the sectors where there is still value at this point of time is pharma, which has been an underdog for about 18 months. And now we have seen action in this space in the last 5 to 6 months. I suppose we should see, this sector overall moving up at least another 15 to 20% more from where we are now. Clearly looking at the sort of earnings which we saw, US FDA's issues are mostly behind them. So I think we should see decent performance from pharma going ahead. And my picks would be Dr. Reddy, Lupin, Sun Pharma, the leaders in the sector, where I still see a very decent, up move from here. The other sectors where I would be positive on is the auto sector, which has done decently well in the past couple of months. And I still see, looking at the sort of order book position of most of these companies, we should still see some more upside. And here my picks would be Maruti, Tata Motors, and Ashok Leyland.
Ambareesh, in the pharma space, the pharma companies are divided into 5 or 6 segments. There is the hospital segment, there's a generic business, there's a radiology business. Any particular theme which one can look at?
I would be looking at those pharma companies which have decently high exports, and because of which I'm choosing stocks like Lupin, Sun Pharma, and Dr. Reddy's. Among the hospital space, my pick would be Apollo Hospitals. But if you're talking of diagnostic, I clearly see a lot of competition coming up there. So margins would be under pressure. I think COVID season was an extremely good season for them, and because of which we saw a number of IPOs from that space. But at these levels, I find most of the diagnostic companies quite expensive.
Talking about the auto sector, the rally has kind of fizzled out in the past couple of weeks, but EV stocks are relatively doing better. So is there a possibility of, still investing in those stocks?
Absolutely. And clearly you have Ashok Leyland and Tata Motors having their decent share in the EV CV business, CV in the sense the buses business. So because of which I've been recommending Tata Motors and Ashok Leyland.
All right, I had to ask you something about the IT sector, the IT pack. It's a favorite as far as Indian stock market is concerned. Most blue chips are IT stocks in the first place. We've seen a bunch of IT companies on an acquisition spree. HCL Tech acquired a company, Infosys acquired a company. But Suyash here tells me that a lot of those acquisitions and the boost from it has been priced into the IT stocks already. So tell us your view on the IT pack per se.
In fact, we saw a decent slowdown in the IT space, especially on the margin front, because the costs had gone up. We had seen that the discretionary order flows had slowed down. And that was very clear in the sort of earnings which we saw in the last 2 quarters, and especially this quarter. Even the management commentary from most of them hasn't been too great. But then I see a decent sort of a recovery in IT possibly over the next 2 quarters. So it should be a time to prepare a list of the stocks you'd like to buy. And I think over the next 1 or 2 quarters, you'll get a decent opportunity to pick these stocks at slightly lower levels. And here also, my picks would again be the top companies, which is TCS, Infosys, and HCL Tech. And among the mid-sized ones, I would clearly look at a stock like KPIT, which has anyway become a multi-bagger, but still, looking at the performance, looking at the sort of order flows which they have, especially from the EV space, I think we should see much better levels. And the other stock is Tata Elxsi.
Mr. Baliga, good morning. Kartik here. Thank you for joining us this morning. I want to draw your attention back to the pharma space and this new directive coming from the government asking doctors to prescribe only generic drugs, unbranded drugs. Does this mean that we could see the likes of Dr. Reddy, Cipla, Lupin, etc. suffer despite these being your stock picks?
The effect may not be as much as those which are completely like India centric or India oriented. I think they would suffer more than companies like Dr. Reddy, Lupin, or Sun Pharma, which have a decently high margin of exports. And being established for this long, I think it'll take a while for this to play out, because despite the doctors prescribing generic names, you'll see the pharmacies, doling out these branded your items against the generic names.
All right. And if I can go back to the auto sector, you mentioned that one of your picks happens to be Maruti Suzuki in addition to Tata Motors and Ashok Leyland. The data suggests right now that Maruti has been a little slow when it comes to adoption of electric mobility as opposed to, let's say, a brand like Tata. And at the same
Right.
time, the hottest selling category in passenger vehicles right now are SUVs, where again Maruti is not one of the front runners. What keeps you bullish on Maruti Suzuki?
See, one thing is very clear that Maruti's roadmap for EV rollout is 2025, and they have stuck to that for a while. Clearly, I expect the EV market to mature EV market in the sense for passenger vehicles to mature by 2025. And that is the time you'll have the big bang launches by Maruti. And as far as SUV is concerned, they've recently launched an SUV, which again has got a very, very good response. And I'm expecting a decent number of launches over the next 12 months from Maruti. And I think that is what will keep the interest on.
Okay, and talk to us, sir, about global cues as well. Hopefully, crude should hover in the range of about $90 a barrel and should not exceed that. So that should at least keep the current account deficit in check. But what about other global cues, including recession and inflation in the US and the slowdown in China? What is the kind of coupling that you would see on Indian stock markets?
See, like you said, clearly the silver lining is the crude. As long as it does not cross that $95 barrier, that may not be too negative for India, and we can still manage with crude between 90 to 95. But then the sort of a slowdown which we are seeing globally, I think is going to affect us to a certain extent, because when you have fire all around you, surely the heat is felt. And because of which I've been a bit skeptical, bit cautious on the Indian markets. And clearly, if you look at the sort of order flows which the exporters have been getting, I'm not talking of India, I'm talking of globally, and especially China. The sort of export orders which have been flowing in from Europe and US for Thanksgiving and Christmas. Most of the orders get over by August, because the deliveries should happen by November, first week, November, second week, to be in time for Thanksgiving and Christmas. I believe these order flows have been much less than what we have seen in the last 2 or 3 years. And some of the exporters are saying that the orders are, as much as 2018. So we are actually going back 5 years. I think this will be a dampener once the real figures start coming out. And once we look at the demand in the next 4 or 5 months, during the festive season, I think that will be a dampener for the global economy as well as the markets.